Hello, Assalamualaikum and welcome to our online presentation. Today, I am joined by a talent team who have dedicated themselves to Mr. D Group Berhad in the subject of Islamic investment. With us, I am Ismail Afid and my group member Muhammad Fakhur Zikri and Ilham. Together, we are excited to make a presentation about Mr. D Group. So, without further ado, let's get started. Story Mr. D Group Berhad. Mr. D, a Malaysian consumer hardware store, began in 2005 and expanded to include store in various locations. In November 2021, it opened in Turkey, Tel Aviv, Rina, Spain and Madrid. The company operates 900 stores in Malaysia and began e-commerce operation in 2018. Mr. D was publicly listed in October 2020 and report a cumulative revenue of RM 2.6 billion as of Q4 2020. In May 2022, the group opened Mr. D Plus, a 30,000 SQFT mega retail store and reached 1,000 stores in August 2022. Chart analysis liquidity ratio. Current ratio. It shows that the current ratio of Mr. D decreased by about 1.735 times in 2020 and increased in 2021 by 2.013 times. In 2021, it decreased slightly by 1.909 times. In 2021, they will have slightly increased their inventory ratio, an increase in their current asset, and an increase in their liability will make their ratio in 2022 decrease. In my opinion, in 2022, the company need to reduce asset and liability a little to improve the performance of Mr. D. Quick ratio. It shows that the ratio will be high in the quick ratio in 2021. The ratio in 2020 was equal to 0.417 times and increased in 2021 by 0.622 times. In 2022, it was a decrease because the inventory at that time had increased too much from the previous year. The ratio in 2022 was 0.383 times. In 2022, the inventory will increase more, causing it to fall in that year. Therefore, the company need to reduce its use of inventory a little. Chart analysis. Efficiency ratio. Inventory turnover ratio is a crucial indicator of a company's sales performance. A large ratio indicates better sales, while a lower ratio indicates a small sale. It helps organizations make better discussion in areas like pricing, manufacturing, marketing, purchasing, and warehouse management. Mr. D Berhad Group good turnover ratio was 2.127 times in 2020, 2.645 times in 2021, and 2.126 times in 2022. Fatu ratio for all three consecutive years show full ratio performance. Based on the chart above, we can see that the company will have the highest inventory turnover ratio in 2021. Although the company Fatu is decreasing from 2021 to 2022, it still shows good performance because the value is positive and greater than 1. Fatu in 2020 is 1.90 times, while in 2021 it increased by 2.087 times, and in 2022 it decreased slightly to 2.0 before seed time, I suggest that net fixed asset in 2020 should increase a little and that we need to reduce sale in that year. This is so that there is no fall in that year. The higher the total asset turnover ratio of a company, the better is the level of productivity. This figure also shows that the company assets are falling from year to year in terms of sales. This may be due to their sales not attracting interest in the company and investor, resulting in all fall or discount. The total asset turnover ratio in 2020 was 1.135, followed by 2021 with an increase of 1.249 and in 2022 with a fall of 1.199. SCP in the last 3 years, the average SCP yesterday was 15 days. The group best performance was in 2022 with all 12-day ETA. This performance followed the group highest revenue of RM to 3,900 million in the last 3 years. SCP 3 consecutive years of good ratio performance. This is because the company SCP is decreasing year by year, showing that the company has no problem. SCP in 2020 is 18 days, in 2021 15 days, and in 2022 only 12 days.
The chart shows that Mr. DIY dip ratio increased in 2020, indicating better accuracy in determining a company financial position. However, in 2022, the ratio decreased due to the lower revenue to cover operating costs, marketing expense, and employees' salaries. Total asset increased in 2022, but total debt remaining high at 1,890,741. To reduce debt, companies enlist assets, sell them, and less them back, generating cash flow. The chart shows that Mr. DIY debt to equity ratio have increased over a 3-year period, which the highest percentage in 2020. This included that the company is more confident in determining in financial position, as is use more debt for possessing assets and resources. However, in 2022, the total equity has increased, and the highest total debt is in 2022, which the lower in 2020. The chart shows that Mr. DIY time interest increased financially in 2021, which total interest decreased from 0631 to 6895. The highest total earning before interest and tax EBIT was in 2022, worth 23506, while the lower was in 2020. The highest value of the time interest years ratio indicates sufficient earning to cover interest expense and debt organization. The bar chart shows a decline in the company gross profit margin from 43% in 2020 to 41% in 2022, positioned due to the rising cost of declining revenue. This suggests a need for future investigation and improvement in financial performance. The chart shows that Mr. DIY net profit margin in 2020 was the highest, indicating better efficiency in determining a company's financial position. In 2022, it was less efficient, indicating less revenue to cover operating costs, marketing expense, and employee salaries. Total sales increased in 2022, which are RM 3,985,842 compared to RM 2,546,087 in 2020. To increase net profit margin, a company need to increase sales rates. The chart showed that Mr. DIY operating profit margin in 2020 was the highest, indicating better efficiency in determining a company financial position. However, in 2022, it was less efficient, indicating less revenue to cover operating costs, marketing expense, and employer salaries. Total sales increased in 2022, which RM 3,985,842 compared to RM 2,546,087 in 2020. To increase growth, Mr. DIY should focus on product quality and promotion for smooth sales operation. The return on equity chart for Mr. DIY showed that in 2020, it was more efficient in helping investors determine a company's financial position, which a highest percentage of profit for daily sales. In 2022, it was less efficient with less revenue to cover operating costs, marketing expense, and employer salaries. Total asset increased in 2022, and the highest total net income for common shareholder was in 2022.
Return to asset 2020 14.99, 2021 15.99, 2022 14.23. The return on asset charts for Mr. DIY shows a significant increase in 2022, indicating better efficiency in determining a company's financial position. However, in 2021, the return on asset decreased, indicating less revenue to cover operating costs and employee salaries. Total asset increased in 2021, while common shareholders' total net income decreased in 2022. To increase return on asset, companies should increase their asset rate. Charts and analysis Mr. DIY berhad market ratios. 2020 53 cents, 2021 68 cents, 2022 50 cents. Based on the bar chart, earnings per share increased from 2020 to 2021 and fell in 2022. Earnings per share may decrease as profit falls if this does not happen in 2022. Profits will continue to increase, so investors can invest in corporate governance along with experienced management. If the ratio is decreased, then the investor should not take exit action but should find out why the earnings per share start to rise or fall. Dividend per share 2020 15 cent, 2021 27 cent, 2022 22 cent. The company is on track to meet its 50% dividend payout target for the current financial year, with a dividend per share of 22 for the second quarter ending 2022. This brings the cumulative dividend per share to 50 cent, equivalent to a 57% payout for the first half of the year. Dividend payout ratio 2020 28.30%, 2021 39.70%, 2022 44%. The company's dividend payout ratio has increased from 28.30% in 2020 to 140% in 2022, possibly due to strategic factors or financial policies. This raises a question about the company's long-term sustainability and aligns with Sharia principles. Investors should consider the impact of this high dividend payment on the company value and future growth potential. Price-earning ratio 2020 39.25 times, 2021 35.44 times, 2022 40 times. The dividend payout ratio has consistently increased from 28.30% in 2020 to 30.70% in 2021, indicating a positive trend for companies. This could be due to increased profits hours or strategic dividend distribution. However, further data is needed to understand the company performance and dividend payment decision. Dividend yield 2020 0.72%, 2021 1.12%, 2022 1.1%. the company is on track to meet its dividend payout target for 50% for the current financial year, with a dividend yield of 1.1% for the second quarter ending 2022. This brings the cumulative dividend yield to 0.72%, equivalent to a 57% payout for the first half of the year. Conclusion: Mr. DIY Berhad's financial performance from 2020 to 2022 showed improved liquidity management, but a decline in quick ratio and inventory management efficiency ratio showed increased inventory turnover and fixed asset turnover, but a slight decline in asset utilization efficiency. The company leverage ratio showed improved financial structure, but profitability ratio declined, suggesting rising cost or pricing pressure. The net profit margin and operating profit margin declined, and return on equity and return on asset also decreased. This finding suggests areas for strategic improvement in Mr. DIY financial performance. Thank you.